Hello, everyone.
Good morning, everyone. Just a couple items. We'll get started here um, in about one more minute. We have several folks that are trickling in here, so thank you for your patience as we allow folks to get settled in, and then we'll get started here probably 1 minute. All right, and so just for the sake of time, I'm going to start with just a little bit of housekeeping items, and then we'll get started here. So, would love for questions and comments to come through as you have them. Please submit those either in the chat, or there's also a Q&A section if you'd like to utilize that for any questions that you have. If you'd like, you are also welcome to unmute once we get to the end of our formal part of the presentation to ask any questions directly to either myself or Jeff here from LoanStar. And just a heads up, we do have your lines unmuted on our end, so just make sure to keep yourself muted for now until you intend to speak, and then of course make sure you're unmuting yourself if you are intending to speak. So with that, I'm going to go ahead and get started here. Hopefully you're in the right place. I'm going to share my screen here. This should be keeping embedded finance local. I'm really excited to be here with Jeff Wojtak, who's representing LoanStar here today. My name is Ben Herring. I'm the Director of Partnerships with CUCollaborate. Been working in credit unions now for about 13 years. Worked at a credit union here in Minnesota, which is where I live and work from, and then worked for the league here in Minnesota, the Minnesota Credit Union Network, prior to joining the CUCollaborate team. And now I get the fortune to work with organizations like LoanStar to help our clients move the needle on the various different strategic initiatives that we're helping them with. So before I jump into a couple slides here on my end, I'm going to hand it over to Jeff for his intro. Jeff.
Hey, thanks, Ben. My name is Jeff Wojtak. I run channel partners here at LoanStar. And like Ben, a lot of years in the credit union space, about 20 years in financial technology altogether. So really excited to be talking to you about how to keep embedded finance local while also helping the underserved today. So great to meet everyone and looking forward to the discussion today.
So we're really lucky to have partners in LoanStar. I'll save much of the description around who they are and what they do for and with our credit union clients and credit unions across the country. But just want to say that it's partnerships like our partnership with LoanStar that helps us to really activate and provide tangible ways for our credit union clients to move the needle, like I said, on various different things. And so we're going to talk a little bit about how credit unions have been leveraging the services that LoanStar offers to essentially reach consumers in areas where there might be advantageous for your credit union to explore. So whether you're seeking CD5 certification or hoping to boost your lending in that area, or if you are a low-income designated credit union or seeking low-income designation, we can leverage organizations like LoanStar to help you with those initiatives. So as far as these partnerships are concerned, when it comes to CUCollaborate, we've developed a lot of different pieces of software. I think many of the folks on the call here know today that we are a software, data analytics, and consultancy that really focuses on helping credit unions grow. We have a lot of different areas of expertise. I love this slide because it gives you a full scope of the various different things that we do here at CUCollaborate. And I want to share these things two reasons. One, for anyone who doesn't know much about CUCollaborate, we do focus on pretty much the overarching goal of helping our credit unions grow through membership eligibility, decisioning software, seg group, prospecting and targeting. We have a proprietary map that we continue to evolve and that our clients continue to use day in and day out to help them envision what the future of their growth initiatives might look like. Lately, we've really focused on impact and performance software. We are a data consortium and can provide analytics across several different data points and metrics that help our credit unions move the needle toward understanding who their membership is, how they might benefit their community, the economic impact they're having within their field of membership, and yeah, progress tracking. So understanding how you're performing to your LID and CDFI goals, and then our consulting team is an amazing resource that we're able to offer our clients, and they focus on field of membership expansion, charter conversions, certainly low income designation and CDFI work. We've really been working on helping credit unions with their branching strategy, marketing, and all that has helped us help credit unions identify potential inorganic paths toward growth on into their future. I share all that because since we do build our own software, we have APIs that allow us to identify when consumers are coming through a given platform like LoanStar, who might help a credit union with their low income designation or their CDFI certification. We're really lucky to say that LoanStar has implemented our APIs to help drive members to our credit unions who are looking for help with that. Much of what LoanStar does is really impactful and it has a lot of potential benefit for communities. And I'm really excited to have them share a bit more about what they do and who they are with you guys. So with that, I'm going to go ahead and stop sharing my screen and allow Jeff the opportunity to pull up his slides here and cover off on how LoanStar helps credit unions through their model.
Sounds good. Thanks, Ben, and appreciate the intro. Just a quick background on, Lone Star and who we are. So really what we're passionate about here is helping local businesses offer local loans to local community members for a variety of different sources. And that's what we do every day, all day. So Lone Star, you could think of us, we're an embedded finance platform. And we also have the ecosystem to allow just about any credit union to offer local embedded finance solutions. And when we started talking with CUCollaborate, it just made sense because we love the idea of helping the underserved. And we've always had it, focus on areas we thought were LID CDFI designated areas or LID CDFI investment zones. Now, with the help of the CUCollaborate APIs, we can really hone in and see exactly where those areas are, where we can now reach out to merchants to serve those areas and further help the community, which is what credit unions do best. So just as a company, we are a CUSO. We've been around since 2016. We have integration to all the major consumer LOSs. So that's a big piece of what I do is manage those relationships and just very high growth rates. So, I think we've got a few customers on the call here today, but it's certainly been an exciting time to be in the embedded finance space. So, Ben, if you're okay, I'm going to kind of walk through a little bit about the deck, if that's all right.
Yes, please, please.
Excellent. So, the real goal here today is to talk about how do we keep embedded finance local? How do we get embedded finance local? And so I thought we'd take a step back and just sort of define what is embedded finance? Why does it matter? And just simply put, embedded finance is a way that businesses can match their services to a banking institution to offer up their products at the point of sale. And this is done through a branded portal where the business or the consumer, the applicant can take an application for, you name it, home improvement projects, RVs, dental, that type of thing. And then that application is fed into the lending partner who receives it and decisions it and is able to render back a decision to the merchant and the applicant And this is obviously something that continues to be on the rise as people really expect to have this when they're making larger purchases. So that's just a quick definition of it. As a market, it's growing quite rapidly. So in 2023, embedded finance was valued at about 54 billion. Over the next 5 years, that number is going to continue to grow. And it's estimated that embedded finance accounts for about 5% of purchases today. So this is certainly a market that is not going anywhere. I was in a meeting yesterday with someone who's a thought leader in the credit union space, and he was laughing, saying that some of the younger people don't even realize that they have a choice when they're buying something to go to an outside solution than what is being presented to them, like an auto loan or something. So that's sort of what the younger members out there are thinking, that they have to go this way or it's really married together. And that is the case where embedded finance, it makes the process easier for the merchant, for the consumer, and the lender. But a quick synopsis of the market right now, embedded finance as a whole is usually there's a lot of larger name players in the space today. So, you think of Green Sky, you might have heard of, Truist, Regions, Synchrony Home, Wells Fargo Retail, and they all serve a purpose in that they are able to enable embedded finance. And, right now, the timing for the credit unions to take embedded finance local is really opportune. A reason being, a lot of these companies that do this on a national scale, they have more of a fintech model where they depend on certain sources of funds. So obviously, with liquidity shrinking and interest rates rising, that's put some pressure on that model. And number one, these loans are going on today in the marketplace. So what we want to do is try to help you chip away at this market share and start to re-intermediate these borrowers on the local level. And we've got a bunch of different ways that we can do it. And the real cherry on the top here is we're able to help on the underserved. So some of these programs might, only want a paper. Well, now with our partnership with CUCollaborate, we can identify certain areas and maybe help out people and allow you to go a little bit deeper in FICO in a way that makes sense for your specific credit union. But again, the goal here today is, how do we help you at least show you the path to making embedded finance local? Because it can seem like a daunting task, and especially when you start thinking about, how do I compete against these national players? And between us and CUCollaborate, we have everything to allow you to do that and serve the underserved. So just from a high level, number one, in order to compete, you're going to need really nice tools that the merchant can use to give to the applicant to take the application. And that's where Lone Star has you covered, top to bottom. So the tools to be able to get that local merchant to use a product that is going to be able to get you the loan, you can check that box off. So that right there is a huge win. And a lot of the merchants that use us really love the tools as opposed to even some of the bigger players. So that's certainly something that you're going to need to bring it local. Uh, Another reason I think a big benefit to the community is transparency for the members on the monthly payments and lack of hidden fees. So in some cases, we might be replacing a predatory product. So obviously, businesses want to have the best service for their customers, the best products. We know that credit unions can provide that. So having great tool sets and then lending products that are transparent is obviously key. And then also, how do we go ahead and serve the underserved via embedded lending? And the way that we did that, Ben touched on this a little bit. I've got a slide upcoming that walks us through start to finish. How does that work? But we leverage the APIs and the functionality that CUCollaborate has come up with to really help us identify these underserved areas, whether it be for low income designation or CDFI investment zones. So again, this is everything that you're going to need to get started with this. And you may have merchants or businesses that you're already working with that are asking you for this solution. You may not. So if you don't, Lone Star has existing merchants that you can obviously tap into and start to work with them, or we have a sales team that can find you local merchants in your specific area. So the real benefit, and I think the opportunity for credit unions, is every one of you on the phone call here is a different institution in some way, manner. The the needs of a credit union in Arizona are going to be different than the needs from, a credit union in Maine when it comes to the type of local financing you can provide, right? Solar or foundation repair, et cetera. So we can really help you cater to your specific field of membership and geography, which is really exciting and not something that many others can do. So touching on the benefits for the credit union, why is this helpful here? Uh, Not sure how many of you on the call have business memberships today, but think about this for a second. If you had a business member and they said, I need to offer financing for I've got a regional HVAC company or maybe a larger dental practice. I would love to offer my customers consumer financing. I don't like my current financing partner. I want to work with someone local. This is a great way for you to deepen that existing relationship. And, if you're able to be their main source for consumer financing, they're going to love you forever. In addition, it's a great way to find new business members too. If you can go out in the community and really show them the tools that they can use to be able to take applications and feed them into you, that's going to get your foot in the door to hopefully get them as new business members. So obviously, that's a big win for a lot of credit unions is deepen those business member relationships. It's also a way to win new members. So if you talk to any of our customers, they'll let you know that a majority of these applicants are going to be new to the credit union. So about 92% of loan applicants last year were new to the credit union. So when we're talking about, hey, I need help attaining or retaining my low income designation, that's why this is such a great model to help you find those type of members, because it is going to yield the new membership that you're looking for. And finally, it's just a great way to grow and diversify your loan portfolio. Maybe indirect lending is for auto loans is shrinking a little bit, or you want to diversify. This is a fantastic way to do it, whether you're looking to promote more unsecured loans, HELOCs, or credit cards. There's a solution out there for you. So obviously, there's a lot of benefit to the credit union from many different levels, enterprise wide. But when we talk about how do we incorporate and weave this in with all the great benefits of low income designation and CDFI, there's obviously a lot of bullet points here. And, fortunate enough to have Ben and the team at CUCollaborate as our subject market experts on this matter. And Ben, would you be able to walk through just some of the benefits of the LID and CDFI?
Yeah, absolutely. Thanks, Jeff. And actually, I think it'd be a great time for us to understand a little bit better who's out in our audience right now. So we're actually going to launch a really quick poll here. As Jeff mentioned, much of the services that LoanStar provides and the reasoning behind our partnership with LoanStar has to do with some of these strategic initiatives that we help our credit unions with. And so I want to understand, what are the things that you're focused on today, and you can choose kind of all that apply here. Whether it's your credit union is currently focused on low income designation, CDFI certification, diversifying your loan portfolio, growing members, or just growing in general your loans. Would love to learn a little bit more about who's out there today. So just do take a moment to fill that in. So as you're doing that, I believe that there are several low-income designated credit unions out there on the call here today. I'm sure that you know well some of the benefits that is provided to your credit union as a result of that designation. But just to kind of like level the three main reasons why credit unions reach out to CUCollaborate and need help with this support is because they recognize that the LID designation allows them to accept in non-member deposits from any source. It gives you, especially when it comes to some of the liquidity constraints that we've seen across credit unions over the past several years here, a little more option, right? When it comes to some of those needs. There are there are grant opportunities available to smaller credit unions through the NCUA's Community Development Revolving Loan Fund. If you are a small credit union and you have not heard of that program, definitely take a look at it. I'm happy to send a link out to anyone who's interested. We also support credit unions' needs in that area. Probably the number one reason we get reached out to today about credit unions needing to attain or retain their low income designation status is with regard to the member business loan cap. With your lid, you are exempt from compliance on that, and it's a huge driver of clearly commercial business lending. And lastly, I would say, again, when it comes to some of the initiatives that credit unions are taking on, the ability to include subordinated debt into your net worth is in some cases critical to the operations of the credit union. So a really big opportunity for credit unions. If you don't have your lid right now, you should definitely look into how you might be able to obtain that designation. And if you are currently low income designated and need help with it, and need to make sure that you are maintaining that 50% plus one, the threshold of your members that qualify. Happy to talk more about how CUCollaborate helps credit unions in that area. And then on the other side of the coin, we do also do a lot of work on CDFI and want to make sure that any of the credit unions out there today that are either currently CDFI certified or exploring CDFI certification understand there are some changes that came up recently, and there's a lot of benefits to CDFI certification. You have regulatory relief options, and you also get access to some pretty big dollars through the CDFI fund. We have an entire team who focuses on CDFI certification and wanted to just make sure that everyone knew that there were several kind of changes to CDFI certification eligibility, and we'll share these slides out to you. If you are at all concerned about making sure that you're hitting especially your lending targets, LoanStar would be a fantastic option for you to explore in that vein. So, Jeff, I'm going to hand it back to you for discussing a little bit more about how you can help credit unions move the needle on those various different initiatives.
Yeah, sure. Thanks, Ben. And like you said, LID, CDFI, the way that we can help you get these new members is through a variety of different lending verticals. And the great thing about LoanStar is their flexibility. So, we can really do any loan outside of a first mortgage or a direct car loan. So it really lends itself. I know when it comes to loans to LID members, some credit unions like to go maybe with like braces as a great fit for that. CDFI, it might be more focus on, roofs or larger projects like that. So just wanted to make the point that the renewable energy is obviously big here. So like solar in California, Arizona, and Nevada, is really able to cater to what you need. And again, if it helps you serve the underserved while getting LID certified, CDFI, even better. So that's really how we get to that certification here is through this channel of generating loans. And again, most of these are going to be directly to newer members. So just a quick note on how does it work. So I'll walk us through this just to give you some examples. So the easiest, most relatable one for me, especially as somebody that's paid for braces, is a consumer's in need of a particular product. So let's just say it's orthodontic care braces for their kids. They go to check out. It's $3,000-$5,000, whatever it is now. There's a QR code with your credit union's information as name as the financing solution, where now me as the consumer, I can scan that, take the application within the LoanStar platform, hit submit. Then it's going to basically behind the scenes go ahead into the CUCollaborate API, where we'll validate does that member, are they low income designation or CDFI status? If yes, now we have a lot of different options. So that maybe if it's someone is a low income designated area and qualifies for that, maybe we have a different product that goes deeper in FICO, as an example. Better serves the community. If it's not, maybe we have our standard program. So the really plus one for LoanStar here is we've got a full enablement team filled with former executives at credit unions, chief lending officers, those type of folks that help really consult you on these different options. So the big thing is here, we're able to identify that now through the CUCollaborate API, present the options. The applicant data is sent into your consumer LOS. So, we've got great relationships with the likes of Origins, Meridian Link, Sync One, Temenos, and others. So that loan's going to come into you just like it is any other, into to your queue. And now each credit union you're in control of the underwriting, decisioning, funding. So it's just like any other loan. So you're in a lot more control over this process. What we're doing is giving you a channel where these loans are going to come in. And like I said, most of these are going to be new members. So if you're looking for LID membership, this is a great way to do that. So that's sort of how it starts, start to finish. And at the end, if there's questions, I'd be happy to dig a little bit deeper into how this process works. But that's in the gist of it, how it does, how it works. Again, I mentioned the QR code is one way to do an application. LoanStar gives our applicants 6 different ways to apply. It could be, maybe a replacement HVAC where the merchant is going to enter the information in, or maybe they're going to send that link to the applicant via email or text. That's possible. Or even, maybe embedding a web link into the merchant's website. We could allow for that. And then some of these people you might work with, maybe they're really big companies that do this a lot and they have their own user interface. That's fine too. Lone Star has a full API capability to integrate with them. And the big piece here is we're feeding that into your LOS for decisioning. So I'd be happy to answer any questions at the end of this. You may be asking yourself, well, what does the merchant get out of this? And there's a lot of value to the merchants. Number one, and I think is the most important, is they're able to work with a local lender. A lot of times that's not the case. They're calling call lines and they're not getting a lot of love from their existing national financing options because they are not, the biggest name or the largest franchise out there. So number one, credit unions are able to offer much, much better service to the merchants as well as their customers. So that's two really big things. It allows if what you'll find too is a lot of these merchants don't even have an option today. So the customers either got to pay cash or credit card, or they go to another merchant that has financing. So this really opens the door to a lot of business to close more deals, grow their business, improve their cash flow, and work with somebody that is going to be current and so the benefit of LoanStar is we're able to do like quick decisioning, auto decisioning. We can allow for that. And the merchant gets a view into the status of all these loans. So they're visible and they can see right there on their iPad or, phone, whatever device they're on, the status of that application. So it keeps them really dialed in. So just, some big benefits to those merchants as to why this is a win for them. Now, the extra piece here is when we talk about going into maybe underserved areas, that might be a market that was shut off to a lot of these merchants before because the lender that they're working with only wants a paper. If you're able to go a little deeper in FICO on those areas, now that opens up the door to a lot more business for that merchant, and they're able to serve, a wider group of people that they wouldn't be able to before. So again, keeping it local, lenders helping out local businesses in the community, all wins for us. Just don't want this to be an advertisement for Lone Star, but it's relevant to just say, hey, what does it include? How do I get this thing started? I'll just mention that, this is all fully branded to your credit union. So it's a white label solution that is going to have your logo on it. It's going, like I said, it's going to allow for all different types of retail products. So whatever field of membership you're in, whatever is relevant in your area, we'll be able to accommodate it. And the big thing is it's turnkey. So this isn't necessarily anything that's going to be a technical lift because the integration to your LOS is already done. So that piece is already done. So this is able to be a quick 30 to 90-day implementation time frame for you to get you up and running, much quicker than installing a new LOS as an example. So again, very low, if any, technical involvement in this, and just gives you all the toolkits that you need. Also, if you have business members, Lone Star has a starter kit that has tools to really help you reach out to those business members to explain the program, talk them through why it's important, and then start to get them to enroll into it. You can leverage all of our information. We run the merchants through like education programs on credit and then have them take a test. So it's everything that you need Lone Star has within Merchant Link. Like I said, from the merchant's perspective. Two, they can use it on any channel. So if it's, laptop, cell phone, tablet, we can go ahead and use it, any application, which I talked through. And then, different capital. So we may work with larger merchants that have maybe multi-state approaches. You want to work with them and start to do a lot of volume quickly. We can accommodate there, and we can accommodate right down to the single county person if you want to. So it's really flexible, and it is definitely bespoke to your specific situation. So again, uh, I wanted to kind of just summarize here how we can help you bring this embedded finance local and do it in a way that re-intermediates these members, because these loans are happening in your backyard today. There's somebody getting, a, a loan for braces in your neighborhood. There's somebody getting an HVAC, a roof, a new deck, kitchen replacement. Wouldn't it be great to start to take some of that market share away and bring those members into the credit union while serving the underserved and helping you achieve those different statuses that Ben and his team do a great job of educating on start to finish. So I know, Ben, that we had a poll question out there. I want to see maybe if we can open it up to questions at this point. If you're watching this on a recording and you have a question, feel free to shoot us a note at lenders@loanstartech.com, and we'll be able to answer your questions after this. So Ben, I'll see if there's maybe we can just do some Q&A if you're seeing them on your end, as well as go through those polls.
Fantastic. Yeah, thanks, Jeff. Yeah, we had some good response here to the polls. Looks like most folks are. I would assume that most credit unions are focused on membership growth, and then across the board from our responses, membership growth and loan growth were of utmost importance. It looks like we do have some that are exploring CDFI certification. A couple out there who are focused on low income designation, and then loan portfolio diversification was also mentioned a couple times too. We did have a question from William out in the chat here, and yeah, if you do have questions, please do post them in the chat, or you can submit them through the Q&A function. And I think this is really pertinent to some of the things that you were mentioning here. So Jeff, really gonna lead on you for this one. So would this be a product that a credit union could chat with like let's say like a local hospital about, since prepaying for services are now becoming more predominant?
Yeah, absolutely. So, whether it's elective medical or emergency, that type of space, that is certainly something that Lone Star can accommodate. So that's a really good idea. And, I think that's something that we'd love to learn more about your specific use case in that scenario, to see, is it somebody that it wants elective medical procedures, or is it mainly medical expenses? Whatever it is, that's something that we can discuss and certainly accommodate. See, hopefully that helped. See a couple more. Ben, do you have visibility into the other questions?
Yep. So John Kelly has a couple of questions here for you. Could you elaborate a little bit more about your fee structure, how you charge, how Lone Star charges for services, specifically, is it a cut of the interest rate or like funded loan? There are also a follow-up question on this, which was, what are some of the maybe the historical loss percentages for Lone Star loans? Let's start with the fee structure. Like, how do you work with credit unions?
Yeah, so I won't get into the real specifics on it, but the way that Lone Star gets, there's just a one-time implementation fee, and then Lone Star gets paid per funded loan. So not application, but per funded loan. And I think that's important because it really incentivizes us to make sure that you're successful. And that's really the goal here, is to make sure that we're aligning our objectives with yours. And as a result, that's how our model is set up, so that when you win, we win. And then the other part of that question, could you repeat that again, Ben?
Yeah, so I think that John was trying to understand what the historical data was around loan losses for the Lone Star product.
Yeah. So one of the nice things about this is that the credit union is going to be doing the servicing. So we have some, we don't run a loan tape on these loans per se from our end because you're the one servicing it. What we've heard from existing customers is anything that is tied to the home, so anything home improvement related, typically performs like your HELOC loans would. And then anything retail, elective dental, other things that are not tied to the house typically perform like your unsecured. But we have, a lot of different customers that have varying risk appetites too. So that plays a role in it as well. But that's a good rule of thumb when it comes to how we gauge this out. But we could certainly discuss further on specifics.
Last question from John here. Then we have a couple other questions coming through. Do you have like an estimate for like what the return on investment is for credit unions that participate in the LoanStar program?
Yeah, I think it depends upon your what you're looking to accomplish. So we have some credit unions that'll say, "Hey, we love what you're doing. We want to diversify. We want to go really fast. We want to do, 20 to 30 million a month as an example." In that case, we'll really fine point and say, "Okay, tell us what your net yield return, what is your goal?" And we will try to align you with the right merchant that's going to get you that target. So a lot of that just goes into our team really identifying and talking to you about your specific goals and then aligning that merchant relationship with you to help you hit those targets. So it kind of runs the gamut, but if you want to start small and grow, that's a great way too. But it really depends on your specific use case there. And if we have any customers here on the call that want to chime in too about their specific case, I'm happy to hear that as well.
We have a question coming through. I believe this one is, it looks like this one's for CUCollaborate. The question was, are all the services that you offer a one-stop shop? Meaning, do we have to talk to multiple people or do we assign a relationship manager? So for CUCollaborate, and I think actually this might be an interesting question for LoanStar to answer as well. But for CUCollaborate, we have an account management team that is, you'll have a dedicated point of contact for our team. Depending upon the initiative that you're working on, we have very specific experts. So if you're working on low income designation, we have a specific group of experts that help our credit unions move the needle on that. If you're working on CDFI or field and membership stuff, we have different experts in those various different fields, but we have an account manager who is with you along the way. So I'm hoping that helps to answer your question on that from a CUCollaborate services perspective. William, I see that question out there. If I did, can you just give me a confirmation that I answered your question on that? I'd be curious to hear from Jeff how you guys operate on that.
Yeah, so that's a big piece of what we do is we call it lender enablement, but in essence it's account management. And what we do is we have, really whatever you're available for. It could be we could have every monthly call every 2 weeks, whatever it may be, where we're trying to help you succeed. And so we have, a full account management team that really, I would say, consults you and helps answer questions, also maybe offers you new opportunities that come through our merchant pipeline. Obviously, as you might expect, we get a lot of merchants coming to us that are, looking for homes for their, windows, door siding, solar companies. So once we vet them, we can present those to you as well. So you get a full enablement team that helps you along the way, coaching on programs, and just sharing our knowledge of the space.
This is from Frank over at Credit Mountain. So Jeff, so how do declines work within the embedded products? Like who handles the adverse action notification, for example?
So that would be on the credit union. It would just be like normal loan coming through. How that's presented to the merchant and the consumer is really up to you. We can, put in there some different language or let them know somebody will be in contact with them. But that would be on the credit union side to facilitate the adverse actions. You're welcome.
Um,
Yeah, I just saw that one come through. Would you what was the question? Okay, I read some of it there, Ben. Go ahead.
sure. Yeah. So Kyle's chiming in here. Would we receive any due diligence documentation for the merchants that you're working with?
Yes. So a couple things that I'll mention. So we have a Lone Star, we call it a starter kit. But if you wanted to get all of our documents that we collect for due diligence on merchants, and that includes like social media searches as well, we can give you that so that you can just get a quick template of how you do everything. Once you gather those documents, you know, tax returns on the merchant, driver's license, etc., you're going to be able to store all of them in our virtual filing cabinet. So you have all the documents, the merchant agreement, everything nice and neat, orderly within your instance of Merchant Link, which is our Lone Star naming convention there. So everything is stored in there. But then if you're looking more on due diligence, like what do I collect? How do I do this? We've got everything covered for you there that we can get you started and really have an open dialogue more to see if anything needs to be tweaked along the way.
Right. I don't see any other questions coming through the chat here. Oh, and I think I do have a question coming through Q&A here. Just one moment. All right. So another question. Uh, can you talk a little bit about like the risk elements of the program? Do you provide tools um, that help credit unions like model losses or stop loss insurance options available?
Yeah. So like I said, we have our enablement team who is really, industry experts dealing with credit unions. A lot of them come from, former chief lending officers as examples. So they really do a good job of coaching on the different types of programs, how to go ahead and plan for, expected losses. We'll share our opinion on, depending on the vertical that you're talking about. If it's HVAC as example, that's going to be different than dental. So our team will help give you some round numbers to put into a pro forma. And then our team also will work with you on a pro forma that we created to help you input some numbers so that you can start to better whittle down and say, okay, here's the risk expectation. Here's what we want to get from a net yield, result. And then our team will help shape that so that we can hit those targets.
I think the kind of the follow up question was: are there stop loss insurance options that are available, or
So I'm not sure if I'm going to answer this correctly, but we do have a few of our credit unions that put in like insurance products, meaning like if somebody defaults on the loan, they're protected against that, so they can go a little bit deeper in FICO, through various companies. So if that was the question, then yes, we do have some credit unions that do implement that product into the equation.
I think I've covered off on the questions that are coming through both the chat and the Q&A section. So if anyone else has any other questions, if you want to unmute, you're also welcome to ask directly. Otherwise, happy to provide a little bit of time back in everyone's day if there are no more questions today. Um, Jeff, could you maybe drop your email in the chat for folks if they want to reach out to you directly? We'll provide. We'll also provide in the follow up a mechanism for you to book meetings if you would like to set up a time to connect to talk a little bit more about how Lone Star works with credit unions and how they might work with your credit union. For now, thanks everyone for spending your time this morning and or this afternoon with us. Jeff, any last comments?
No,
Takeaways?
like I said, we're really excited to be working with CUCollaborate, and we see the benefit that we're both able to provide to the community and the credit union space. So I think it's a great fit. And if you have any questions, we'd love to discuss it more and really find out what's important to you from your specific field of membership and how do we help you hit those goals. So thank you everyone for attending. We really appreciate it.
Thanks everyone. Have a wonderful rest of your day. We'll talk soon.